Hello and welcome back to an episode of the CTO Show with Mehmet. Today, I'm very pleased. Joining me, Roland Austrup. He's the Chief Growth Officer at Innventure. Roland has a lot of experience when it comes to a mix, which I like usually to talk about business and technology growth and creating new ventures. So this is what we're gonna discuss today. Roland, as usual, all my audience know by now, I don't like to spend much time or introduce my guests because I like them to introduce themselves. So tell us a bit more about you, your background, and then what you're doing currently at Inventure. Later, we can start diving into our discussion. So the floor is yours.
Well, I appreciate it, Mehmet, and thank you so much for having me on the show. It's a pleasure to be here. I likewise don't like to talk much about myself, but I'll try to give you a background on how I got here. Um, I actually started my career in a completely different space. I started as a currency trader and worked for two bank-owned investment dealers for the first 8 years of my career, and then went off to start my own asset management company, which I ran for a number of years. Along the way, I had met the principals of Innventure. So I met them at an alternatives conference many, many years ago, probably around 2014, just as they were starting Innventure, and then became friends with them. Fast forward a number of years, I was planning my exit from the asset management company I created. And Innventure called me, one of the principals called me and asked for some help in the capital strategy around the first company they created, which is a company called Pure Cycle Technologies. And I joined them. I helped them monetize that first business, helped them with the capital raise. Ultimately, we took Pure Cycle public in 2021, and in that process, they asked me to join as a partner. And what really attracted me about Innventure, I think we can get into this as we talk, but Innventure is a company that creates companies around transformative technologies that it develops. So it's a company creation engine. It's a technology commercialization company. What struck me very strongly about Innventure coming from the asset management industry is they were doing something very unique that mitigated risk, that created value. And as a former fund manager, you're always measuring yourself on the basis of what are you doing that can reduce the risk of index investing or improve the returns? Are you adding any value to what you can do passively? And I saw that what Venture was doing exactly that in comparison to traditional company creation or venture capital, private equity. They had a philosophy of mitigating risks, being very focused, being very selective, versus a strategy of let's invest in a number of different ventures and hope a small probability win. So I thought there was something really unique that Innventure is doing, and that's how I got to where I am.
Great. And thank you again, Roland, for being here with me today. Now, I'm going to start with what Inventure does today. And it's quite interesting. I read a lot about the topic. I'm fan of anything that create new ventures, right? So, because, it's a power of creating new economies sometimes, affecting other people's lives also. But at Inventure, usually the company starts with technologies that already work inside large corporations, right?
That's
So yeah, so why do so many valuable technologies though never become successful businesses inside the companies that invent them?
That's a good question. I think the heart of the issue is that what it is that there's a specific skill set that's required to create a new company. You need an entrepreneurial mindset, and you have to be able to start things from zero. Large companies are very good at incrementally improving what they already have, but they're not designed to be entrepreneurial and start from zero. And it's the comparison is an agile speedboat to a large aircraft carrier. One can move much more nimbly than the other, and so it's just a different skill set. And I would argue that that's also a different skill set from traditional company creation, because often traditional company creation, when you're thinking of the entrepreneurial side, um, an inventor might have an interesting technology, but it's a completely different skill set to know how to productize a technology and bring it to market and how to build a business around it. Again, just so, but whether it's an entrepreneur or a large corporation, it's a different skill set to start a business from the ground up. You actually know how to have to know how to commercialize a strategy or go to market with a new company.
Right. And I think there's similarities even when entrepreneurs want to start companies from scratch. Like if they don't have the know-how, go to market, let's say, and how to reach customers and put the technology in front of them. So these ideas they die sometimes even before they come out to life, which is I think make a lot of sense. Now, when Roland, you are evaluating a corporate technology, what kind of, I would say, signals you look for that you would say, like based on this, I think there's a large chance that maybe a standalone company can be spun out of this larger organization to take this new technologies to the new level.
Yeah, so I mean, the biggest thing that we have to do and look at, I mean, we have a very disciplined process, and I'll kind of walk you through it. There are really, I think, four gates is the best way to describe it. The first thing is you have to be able to quantify the opportunity set and what is the market need that that technology is addressing. How large is that market need? Is there, and then are there solutions for that market need? Because that's effectively what we're looking at. We're looking at technologies that address major unmet market needs. We're not trying to find things that incrementally improve. We're trying to find things that will transform or disrupt. It will create a solution to a problem that exists. And that's often the starting point for the multinational doing the research. The multinationals that we collaborate with, they have deep R&D budgets. I mean, the top 2,000 companies have an annual R&D budget of something in the area of $1.5 trillion a year. That's the ore body in which we're looking for gold. But what the part of their R&D is focused on solving problems that they can't find a solution for, but that they want a solution for. So if they go to market and can't find something, they will invest R&D dollars in identifying a solution. But they may not be the right entity to commercialize it, and that's really where we come in. So, but what we're looking for first and foremost, and the first gate that we look at is that qualitative. We quantify the information, but we're basically trying to qualify the opportunity set. How large is the unmet market need, and uh, uh, is there competition in there already, or do we have a unique value proposition and a moat, even if that moat's just time to market? Where we can attract significant market share. So we're trying to calculate the size of the opportunity. Then we have to go through a technical assessment of the technology itself. So we have to basically determine whether there are technology risks still in play, whether the technology works, can it be scaled, so these are a lot like, looking at your background as a go-to-market operator. It's a lot like how do you qualify your customer, but we're qualifying the technology and the opportunity for technology. So we have to say, does the technology work? Can it be scaled? Um, we start with and the nice thing about working with multinationals is they've already done most of the work. When we're taking on a
Mhm.
technology, we're not really taking on a technology risk because they've already developed it to a TRL level that's going to be, or TRL that's significantly higher than startup. But once we've done the technical validation, then we have to do the quantification. Again, that's really where you're looking at the capital efficiency of the model. What's the capex? What's the opex? What are your cost of goods? What's the supply chain feasibility? Are we going to disrupt the supply market and have to adjust the pricing, or can it accommodate what we're doing? And the most important thing that we have to arrive at is two things. One, there's an economic value proposition that's going to compel adoption in the market. So there has to be an economic motivator for the customer to adopt. It can't be a nice to have. We want it to be a must have. It could be a must have physically, or it could be a must have because the economic benefit is so strong. And then there also has to be strong margin for us. So this,
Well,
because at the end of the day, we're looking at what's the capital efficiency of our model, and that's measured by basically saying things like, how much money are we going to have to spend, and what's the enterprise value we're going to create from that? Because that's how we measure ourselves: is how much do we invest, and what's the economic value or the enterprise value or shareholder value that we create from that investment. And then, of course, the
Right.
last stage is then you have to negotiate the deal with multinational. And
Yes, indeed. Now, one out of curiosity question, Roland. So let's say this quantification. Um, it's very obvious that there's a huge opportunity ahead of us, but are all organizations ready? Let's say from maybe organization structure perspective and cultural perspective, because sometimes, especially in our world, in the tech world, like we hear about how sometimes like bureaucracies, structure complexities, make kind of complexities in front of these kinds of innovation and getting the technology even out. So, do you also kind of rank that when you study the company that you're gonna work with?
the complexity, is that what you're asking me, Matt? Like,
As organization, not as technology. Like, I mean, how much this organization is flexible in terms of getting into new things, like, or let's say, do they have the culture that allows for this innovation to flourish, if that makes sense?
well, we create the company, so we sort of get to create the organizational culture of the business. But by definition, every company that we create has to be malleable and adaptable, because when you're transforming markets, um, there is no roadmap. You're not playing into a traditional roadmap. You're creating new pathways. So every company that we create from day one has to go in with the mindset that if we're disrupting something or transforming something, we don't know the path. So we have to be adaptable. You know, it's like Yogi Berra's line, when you see a fork in the road, take it. Didn't say which fork, but the point is we're facing those decisions every day. So you have to have a culture and an organization that is flexible. So you have to be grounded in the first principles of the business, and you have to have a go to market. Each company has to have a go to market strategy, which actually we help create, because we're creating the initial commercial blueprint when we start the
Hmm.
company. But we know going in that you have to be adaptable. And in every business that we've created, uh, it's followed a different path than we initially anticipated. And so you have to have a very, again, this is part of when you asked earlier, why do major multinationals not commercialize the technologies themselves? It's you
Right.
don't have that organizational culture to be able to um, on the fly, so to speak, adapt your go-to-market strategy, because you're getting feedback all the time about what's working and not working in a new pathway that you're.
Right. Yeah, that make a lot of sense. Now, once the technology is validated, Roland, and you start to, work, on the floor about it, what's the hardest part? Like, is it building the product, building the business model, finding customers, assembling leadership team? Like, which part is the hardest part in your opinion?
The hardest part is being able to do all of that, because there's points of potential points of failure at every single juncture. It's not just the technology, as you said. It's how do you productize it? What is your go-to-market strategy? How do you assemble a leadership team? That's again where Inventure has a lot of value. Typically, with our companies, they're started with in-house management. So in three of the four companies we started and created, the initial management team was the Innventure management team that did the work to start the company. And then over time, we bring in industry experts. So part of the initial stage of company creation is us running it and us building a management team. But it's the people that did all of the vetting that started the companies that are typically running the businesses to start. Only in our third company, which today is obviously one that the market is paying close attention to. Our third company, Excelsius, is a data center cooling business. So it's direct to chip two phase cooling. We saw that business was going to grow very, very quickly, and so we immediately brought in permanent management that had deep experience in productizing technology, because we saw that one growing much more quickly than the other businesses. And
Great.
proof point of that is we created that business in 2022.
Sorry.
It's telling your investors to pay attention to this part. So it's
Yes.
But no, I mean, but the third company, Excelsius, as I said, it's direct to chip two phase cooling, and we saw that the convergence of high performance compute and AI was going to cause a real tailwind, and and this business was going to scale quicker. So we started it in 2022, and less than 4 years later, we've had significant investment in the company from the likes of Johnson Control and Gron, and valuations that were 665 post their investment. So that shows you how we're growing businesses, but you start them from zero, and we're trying to grow $1 billion businesses, and each business is different.
Right.
But to the question of what's the most difficult, it's putting it all together. It's not one point. It's putting all of it together, and that includes capital. One of the things that we have to do is fund all these businesses. So you have to. That's, I think, the part that most operating companies forget about. They believe that if they have a good business, the capital markets will simply be there and show up. But there are a lot of good businesses out there that are competing for the same capital. So you actually have to have a capital market strategy as well. And I would argue that that's an often overlooked part, is finding the capital to make it all happen, is a critical piece of puzzle.
Absolutely. And happy you brought, the example of Axelius, because there's a lot of opportunities there, and I cannot skip any episode nowadays without asking about the AI. And from your perspective, like, we know that there are a lot of bottlenecks currently, and AI compute, you know demand still on the rise. Do you think, like, there are a lot of underestimation for what the industry need in that space? Because some people, they think, okay, we've done it all, we are building data centers, we're investing in AI as the inference layer, which is the software layer. Do you see some more opportunities for innovations in that side, which is more about the infrastructure?
Yes, and I think that's how we look at Excelsius. It's we're what I always looked at them as the picks and shovels of the gold mining industry, as opposed to being the gold miner itself. That infrastructure, the cooling infrastructure, the technology is absolutely required. Other things are required as well. We're seeing problems in the community pushback about energy usage and water usage. So we're going to have to solve those problems. Those aren't problems that are insurmountable. I mean, human ingenuity is something that we can look back at and say has always shown up. I mean, in the growth of simply the internet itself, you had a lot of networking problems to solve. Like, how are you going to build networks across the globe? But they did. Cabling underwater, but they solve the problems. They look at that's the whole beauty of the whole system is the what we are doing is commercializing innovation, not just in venture, but I mean the economy at large. If you look at all the companies out there, we're really just trying to find ways to live better and more comfortably and find solutions to do that. And then when there are roadblocks in the way, we find solutions to those. So are there a number of opportunities? There are a number of unknown opportunities. And my belief on AI, my personal belief on it, of course, is that um, it's not a panacea, but it's a huge productivity growth tool.
Hmm.
Discovery, creating efficiencies. I mean, it's trite to say it's a calculator on steroids, because it's much more than that, but it's very significant. And so when I hear people talk about things like the fourth industrial revolution and things like that, I actually believe that. And it's a lot like, right now, if you look at, the United States, when they were building railways across the country, they were building the infrastructure for the country. Well, this is what we're doing now. We're actually backfilling the infrastructure that's necessary for what AI and high performance compute can do for us. So I mean, I don't think anybody can forecast the size of it or the opportunities, simply to say that this is a major significant development that has, I think, a lot of legs in front of it. So I think very early innings in what it can do. I think the only caveat I would put to it is that, again, as important as AI is, don't underestimate the importance of human ingenuity which created AI, and
Absolutely.
that can never be replaced. So
Absolutely, Roland. Now I'm happy because you mentioned the pick and shovel, right? So gold rush, I don't know, people call it hype. So in moments like these, Roland, and we've seen at least in my era, I saw it like a couple of times. I know people you just mentioned about the railroad in the United States, which was, a huge opportunity, change, the economy for good, of course. And then we start to see like these cycles of innovation that leaves marks on the economy and for us as humanity on the long run. Now, but in moments like this, what really separates, an industrial deep tech company that really is creating a lasting value from ones who are like just trying to, as we say, jumping on the the bandwagon, and then they say, hey, like we are also part of this and come and join us. So what really makes sure that a company can materialize what they are trying to do with really value for investors? Because at the end of the day, people who are going to invest in this, they want to see the returns on the long run, and they don't just want companies that they are following the hype for the sake of following the hype. And we are seeing it now in the AI. Maybe I'm sure you are seeing that every day, Roland, where companies comes and say, hey, we're adopting AI, we're like doing everything related to AI. And then when you really dig down and figure out that, okay, they just maybe kind of doing automation for some processes, but there's
yeah.
really no deep tech there, like there's nothing. So from your experience, what separates like these two paths of real innovation, lasting value versus just a bubble, as we call it sometimes?
Yeah, and that's the important distinction, because I think that bubbles do crop up and they burst, and separating what's real from hype is kind of the biggest challenge. And your comment about when I look at companies that say they use AI, but somehow magically most companies say they use AI now. So that's like over the last few years. Another analogy: there's a lot of greenwashing going on carbon footprint and environmental issues about sustainability. When people were talking about it, a lot of people were saying they were doing things, but they really weren't. And you can say the same now. If a company says that they're incorporating AI in their business model, um, I don't know how you would go to evaluate it. From our perspective, though, um, I think when we look at technologies and say, is this a real technology with real scale and potential? Um, you have to look at companies that follow systematic processes and can describe those systematic processes versus just jumping on the bandwagon. Um, so, in our business here, particularly Excelsius is not an AI company. It's an AI infrastructure company. It's providing critical infrastructure for that industry. Um, so it's a different thing to be able for me to be able to look at companies that are utilizing AI and say whether what they're doing is really incorporating it or just borrowing language. But that's not really relevant in our case. Our case is really saying, is AI a real growth story? Is it a technology that will create many opportunities, many products? And if so, um, uh, are we able to supply the infrastructure for that technology? So we're not playing in the AI game, we're empowering the AI game.
Which is, based on all the researches I did, it's really the actual opportunity. Because uh, I'm not claiming, but I mean anything which is done on the software layer, kind of it can be replicated fast, the mode can be lost very quickly. But if you are doing something on the infrastructure, to your point, whether it's like cooling, for example, like, or maybe the power, that uh, these data centers, they are power hungry, as we know, and you need to keep, find a way to increase the gigawatts and the power that these data centers want. So this is where actually the opportunities, I see them personally from my own readings and interacting with people in the domain. And yeah, people, they need to understand that AI is not just the chatbot, which is whatever tool you use today. It's like something more deep than this. There are like the chips, there are like, the manufacturing,
Yeah.
and we can go on and on and on. Now, I gotta ask you something, Roland. Now, when you operate in public markets, people often prefer predictable execution, while in innovation, you have to do experimentation. How can you balance those two realities when building new companies?
Yes. But what we like to do is work with the large companies that have the large budgets to do that innovation and to try things out. We like to pick them up when it's much more executable and direct. So we're not taking the technology or the innovation risk. We're working with the multinational that has already developed it. They've spent the time and money to get it to a point. And then what we try to figure out is how do you productize that? Again, is there a market for it? Does the technology work? But by the time we launch a company, we want to reduce many of those risks to scaling risks. We know the technology works. We've identified a product roadmap for the technology. We figured out how to uh, bring that to market. We figured out supply chain adoption curves, and so for us, not to diminish what we're doing and make it less exciting, but we're plain vanilla execution. We just repeat a process over and over and over again, and that goes right back to what I said in the beginning. What's our unique skill set? Our unique skill set is bringing technologies to market. It's evaluating them and it's knowing how to commercialize and bring those to market. So that's where we innovated. Our innovation was doing something that other people weren't doing. We took a very systematic approach to saying, how do you make early stage company creation better? Is there a systematic process you can do? And it started with, let's not be the innovator ourselves. Let's go and talk to these companies that have deep R&D budgets, that don't have these valleys of death where you're trying to evaluate the technology in the market. They are developing the technology and they have the budgets to do it, and they have the market data to do it. They have sales forces, global sales forces, that's feeding them information about the unmet market needs and about the opportunity and about the customer behavior. And we take all of that when we launch our businesses. So the innovation that we created was I would say an innovation around early company creation. How do you do it systematically, and how do you mitigate the risk? Start by working with the multinational. Start with their technology, their market data, and hopefully them as your initial customer and channel the market. So you're mitigating all these risks. So when we look at things, we like to think that we have come up with a very systematic, repeatable process for company creation, and that's the innovation that we bring to the table. And even for us, if you talk about looking at your background again on go-to-market strategy, our go-to-market strategy, how do we productize that? Our productization of that was to actually build a public operating conglomerate where our product is the companies we create, but the way we productize this, of course, initially when Innventure started, the model was different. It was, let's start companies, let's seed them. We'll arrange the financing in their A and B and C rounds, then we'll monetize them and distribute the gains out. That was the wrong product strategy. The right product strategy wasn't wash, rinse, repeat. It's let's build an operating conglomerate. Let's maintain control of those businesses. Let's consolidate their financials and upstream them. And rather than having to sell our companies for our shows to get value, if we're the public entity, like a Danaher or a Constellation or Roper, they'll get all of that, benefit in our share price. So that's how we productized what we do. And it was to create a public operating conglomerate of the industrial giants that we create. So
Yeah, it's a unique and different model to do, but I think, still you follow, you know it's about being able to spot the patterns, Roland, somehow, and having some common characteristics constantly while evaluating these opportunities. So what make you, for example, predict whether a new venture will succeed?
well, again, it's the output of all the things I talked about earlier. The unmet opportunity. How big is it? Is there competition? How much can we get of that? Is there a compelling economic value proposition? What's the capex associated with it? Is so we measure the capital efficiency of it. Those are the things that we look at to say, is something going to succeed? But it starts with, is there a major unmet market need? That really is where it starts with, and that's the number one gating item that we look at, and then everything else just follows downstream from that.
Right. Roland, if you, let's say I'm a CTO, I might be like even non-technical role, but I'm an executive on a company, and I know that we have internally a very promising technology, right? But we don't know what to do with it. Like, what are like kind of like actual practical steps you would recommend to me before even attempting to do commercialization, like the commercialization part?
Well, are you an entrepreneur, or are you working within a larger? Are you a CTO in a large?
Large company. I'm CTO, let's say, in a large company.
Yeah, well, so that's where you have if if you don't have a pathway to commercialize it internally, you are the right strategy is to say, well, who can we partner with in order to do that? And that's where there is a gap in the industry, that CTOs do have a gap in the industry, because oftentimes you'll say, well, okay, this doesn't fit within our mandate. And you could look at it, I can't put words in the company's mouths, but if you look at some of the businesses we've created, the first two businesses we created with Procter and Gamble, and one is a business to recycle polypropylene plastic. That's Pure Cycle that we took public. The second company, which we own, or the largest shareholder of, that we created, is Aeroclubs, which is a sustainable packaging company. It's a package that combines the best attributes of a flexible package in a rigid bottle. And all I can say is that within P&G, it wasn't in their corporate mandate to be in the plastics recycling business, nor to be in the packaging business, but they want their product to go into the packaging that they created, and to use more recycled content. For them, it was very important that the product go into more sustainable packaging and more economical packaging that had better features. So, but they didn't want to be in the packaging business, nor did they want to be in the plastics recycling business. So the question for them is, well, how do we get these things to the market? And the choices are limited. You're not going to go to private equity or venture capital, because they're investors, not operators. You may not go to another packaging company, because the other packaging company might not have the same priority to commercialize something. They might do it on a different timeline, or they may simply not want to have it compete with them. But they have competing priorities, I guess is what I'm saying. So the industry really needed a company like Innventure that says, we specialize in bringing, productizing and bringing technologies to market. So as a CTO, if you're trapped in an organization with a great technology, you don't know how to commercialize it, I mean, you can always call Innventure. And
Yeah,
but that's what we look to do. We actually look to work with the technology officers of major multinationals, so we can offer pathways to collaborate and grow these technologies,
I think
to
they
their
need.
benefit.
Yeah, I think Roland, they need to dare to actually. Of course, like maybe we made it a joke, but this is the reality. They need to dare to, if they believe that this can be commercialized and that it can bring value to the company, they should reach out really, because I've seen it again, time and time again, where they have this, not, I would not call it fear, but they didn't experience the commercial part before of tech, so they were always kind of technology users,
Mhm.
and they became actually technology producers without knowing that, oh, like we can actually add value to the company. I think CTOs, they want to be more leaning towards thinking, big about the whole picture of how us as technology group within the large organization, we can contribute to the P&L of the company. And that's why, the whole idea of the show is, trying to get these business insights to technology folks, so they can open their, you know, I would say, pathways to these new ways of adding value to the organization they are in. And yeah, let them call you, Roland. I would be more than happy if someone pick up the phone and or like look up you on LinkedIn or something. Now, you see a lot of technologies today, Roland. I'm sure about it. And we talked about AI, we talked about infrastructure, but other than that the inflection points that AI is causing in a lot of industries, what other trends maybe we're not hearing much about, but you're seeing them, that they are also at an inflection point and they will be largely overlooked by investors and maybe enterprise leaders, I would say in the coming 2 3 years, 5 years maybe.
Yeah, I mean, it's well, I don't know if they'll be largely overlooked. I mean, there are, we've already talked about AI, and there'll be a lot of other spin-off opportunities in solving the problems of that story. Like, are you going to have solutions that energy solutions? I think as there's more and more strain put on the public grid, there has to be innovation around improving the grid. So, are there going to be energy opportunities? If you look at other things that the U.S. has faced, as an example, critical minerals and the processing of critical minerals, magnet technologies. Those are all areas you're seeing now announcements about onshoring an industry that used to exist in the United States that,
Hmm.
that went away. But if you look at the companies, our businesses, again, you've seen a few things in plastic, which I think will continue. The last company or the latest company we launched was Affinity, and we launched that just around when we went public, just after we went public. We launched Affinity in December of 2024. Again, that was an innovation to create a new feedstock for the chemical companies. So companies like Dow and LyondellBasell and BASF, they need monomers, and right now they get the monomers for their products from fossil fuels, from steam cracking fossil fuels. We're able to take mixed plastic waste and extract those monomers that bypass the steam cracker. We're able to take mixed plastic waste, put it through a fluidized bed process, which basically means you're taking mixed plastic waste, mixing with some particulate matter like sand, gravel, and you're putting compressed air through it or gas through it, sorry, and it acts like a fluid, which causes rapid depolymerization. That friction causes rapid depolymerization, and you're extracting out the monomers. That's a huge opportunity. The olefin market, or the market for ethylene and propylene, and the monomers that the chemical companies need, is about a $350 billion market. It's a massive market, and so this introduces an entirely new feedstock for that industry and that market, so that they can diversify away from hydrocarbons. If there's price volatility, they can also create circularity, which I think the industry has demanded. So I think the opportunity set looking forward is somewhat boundless, Mehmet. Like it's only as wide as your imagination. But yeah, some of these things we talk about now, um, I think the infrastructure for the next generation of high performance compute and AI is going to continue to create opportunities, and then everything downstream from that, again, power, the grid infrastructure, everything downstream from that is going to create new and multiple opportunities. I quote a line that my son told me once about where we are in the arc of human evolution. We were talking about technology, and he said, "Dad," he said, "we're not modern humans. We're the first recorded generation of ancient history." And I thought that was such a very profound comment, actually. So that's a long-winded way of saying I couldn't possibly tell you the range of opportunities, but I think the right way to look at it is you look at where innovation is happening today, and then you look at everything downstream from that, and that's where you see the future opportunities. You know?
100%. And I can't agree more with your son Roland, because like we're witnessing something I think we are the first to witness, right? Like the verge of all these emerging technologies that at this moment in time, where they all, kind of united together to give us, these opportunities. And of course, AI is in the forefront because it's the most obvious thing that we were able to harvest from, the development that happened over, I would say, at least the last 150 to 100 years in technology. And we were able to finally get something that can produce technology for us. And to your point about the other aspects, like you just gave examples from manufacturing and chemicals and all this. And this is where the deep tech, I think that will be very big. Again, it's my humble opinion, based on my readings and my interactions with people. There are a lot of things we don't hear about them in the mainstream, maybe because, of course, the large language models are in the forefront, like the known suspects, always their names comes up. But there's a lot of other things happening in the background. Like, I attend conferences and I hear a lot of exciting things, whether it's in energy, in chemicals, and in even like pharmaceuticals, medicine, like all these other ranges that we don't hear them, about them in the main media very often. But I think we're gonna start to see breakthroughs, and again, using AI and other
Yes,
technologies.
exactly. I think you hit that right on. I think AI is going to be a real tool for discovery in general, whether it's drug discovery or medical breakthroughs or just breakthroughs in terms of processes, industrial processes, and industrial technologies, which is where we tend to put. We're industrial B2B technologies is I would say the area that we focus on. But there's going to be so much innovation. And again, when you see those innovations happen, the question to always ask then is, what's the knock on effect downstream? People always look at the top line. Oh, AI. No.
Right.
What's going to enable AI? What's the critical infrastructure that's going to underlie that? And that's where you're going to see the follow on opportunities.
Absolutely, absolutely. And AI, back to your, when you mentioned about the railroads in the United States, and I think the AI will become just like the railroads, right? It's just a medium
Yep.
for, building new things, similar to how, the whole, gold rush era, like it was enabled because of the railroads, right? So AI will become the mean, the way, but we're gonna discover new things because of this. So 100% on that. Roland, as we are coming to an end, like maybe final words you want to share and how people can get in touch.
Final words are just never underestimate the power of human innovation and our ability to continue to evolve. And I think um, investors, generally speaking, should mostly have a positive outlook when they look forward. You know, it's often people look back as they grow up and say, "Oh, in the good old days," or the world, how's the world going to continue to grow? People look at the walls of worry. They forget about the fact that we are capable of incredible ingenuity and harnessing that and evolving. And I just think that people should always be more bullish than bearish when they look in the future. You know, from our perspective, as I said, we think we're doing something very unique at Innventure across multiple platforms. As I said, we do plastic recycling, packaging, data center cooling. You know, but what underlies that is the systematic process. And what we think we're bringing to market that's unique is that we're a pathway for commercialization for great technologies. There should be more companies like Innventure.
Hmm.
So we think we're certainly trailblazers in creating this. There have been a lot of innovations in private equity and venture capital over time, and we think we're an evolution of that because much like our packaging business that has taken the best of a flexible package and put it with the best of a rigid bottle, we think we're doing the same thing at the innovation level. You know, we're taking the best aspects of venture capital and private equity, and we're trying to evolve that with being owners and operators of the business, not just being investors. We're the owners and operators with a unique skill set. We specialize in commercializing businesses in a systematic fashion, and there should be more companies like us out there. So
Great. Where people can find more, Roland?
always find more on our website, or just looking up our ticker. We're INV on Nasdaq, and the website is www.inventure.com.
Great. Thank you so much, Roland. The links will be in the show notes. I can't thank you enough. It was great discussion with you today to uncover this special model, as you described it, for uncovering technologies in large organizations and taking them to the market to be successful and creating new companies based out of it. It's a unique business model. It's proving its success. I'm sure about also like future success also as well. So thank you for sharing that with my audience today. And as I say always, this is how I end my episodes. This is for the audience. If you just find out about us, thank you for passing by. I hope you enjoyed. Give me a favor, subscribe, and share it with as much people as you can. And if you are one of the people who keep coming again and again, thank you very much for the support. Thank you for bringing the podcast always to the top 200 charts on different countries, now. So we keep changing, countries from week to week. So thank you for that. And as I say always, stay tuned for any episode very soon. Thank you. Bye bye.